Thanks, Nicholas, for the introduction, and here we are for the last kick of the first quarter. I'm here to present the story on ROX Resources, and I can tell you now that ROX Resources is worth a lot more than a punt. We've been here at ROX now. I've been with the company a bit over 18 months, and we've built out this resource to 2.3 million ounces at 4.5 grams. This is one of the highest grade gold resources from a junior developer on ASX. So what we know, and you'll see with the development of the Bellevue Gold Project, that grade is king. And underground mining, when you're able to be more selective with your mining techniques and get that higher grade material to the mill earlier, it will deliver greater success. And moving forward, we want to advance this project as quickly as possible. With the gold price sitting here at where we are at today, nearly $3,500 Australian an ounce, our scoping study was completed in 2019 at $2,400 an ounce. So we see a remarkable increase in the gold price since then. We've got a resource model that's been updated, which has 48% indicated material, or 48% increase in indicated material in the underground studies. That's now shaping up to deliver over 1 million ounces at very high grade of indicated resources. Our pre-feasibility study is due in June of this year. We're busily working through a lot of the met test work now in order to get this project up and running. The regional and near mine exploration is still there. We're not drilling at this point in time. Our expectation is we'll look to restart campaigns on expanding out that resource, as well as converting more of that inferred material to indicated for DFS studies. And we do have alternative funding opportunities. We have a couple of non-core assets that have the potential to be able to add value to the company moving forward and reduce the dilution out there to our shareholders. We're located just southeast of Mount Magnet. It's about 130 k's southeast of Mount Magnet. The Penny West gold operation that's run by Ramelius Resources sits just to the south of us. They actually haul trucks straight past our camp doorstep. It's a fantastic mining location. The operation was previously mined in the mid-90s, where there was a small-scale operation on site. Here we know that the gold price then was about $450 an ounce when it closed. There's a lot of potential for us to continue to move forward. And when you're looking at, as I said before, $3,500 an ounce gold price today, it does make a tremendous difference in the economics of the operation. We have a strong shareholder base. Hawke's Point are a major shareholder. They hold 10% of the company. Venus Metals, we amalgamated the joint venture that sat over the project about this time last year, that we regained that 30% of the company and really opened up the whole resource to future development. That 100% ownership of the UME Gold Project is the first time it's been held 100% in a public company in the last 10 years. The resource update really does put us in a prime position to take this forward through to feasibility studies. 1 million ounces at 6 grams a tonne in indicated for the underground plan will be the prime development of the first part of our feasibility study. We're expecting that we should be able to get around a 700 to 800,000 tonne per annum operation, a standard Eastern Goldfields underground mine. And if you're looking at producing, with a diluted grade of between sort of 4.5 and 5+ grams a tonne, that'll be a significant operation in anyone's eyes. And the increase in confidence of the resource is something we've been drilling out over the last 3 years. It really does improve the overall scale of the operation and the confidence that we have in taking this forward into development. And when you look at the size of the resource, there's not many of our peers with the same scale of operation as what we have here at UME. When you look at the grade of our peers, we're nearly 50% greater than most of our peers on the ASX. Bellevue Gold that just moved into production, and as I said before, they really do show a platform of what a high-grade underground gold development can do. The resource itself and the ounces per vertical metre, there's over 4,000 ounces per vertical metre in the top 400 metres of this project. That is only limited by the amount of drilling that's been done at depth. The more we drill this ore body, the more we know we've got the structure, the mineralisation's there, and every hole we continue drilling deeper, we hit mineralisation, we hit grade. The deepest hole drilled to date at the project is 950 metres below surface, and that still went 4 metres at 16 grams a tonne. This is a very high-grade gold project, and it has the ability to continue much deeper than what we've got planned at present. And our pre-feasibility study timeline is well underway. Our expectation is to complete that study by the end of June. That should outline, as I said, around a 700 to 800,000 tonne per annum operation. And if we can get that grade up to 4.5 to 5 grams, that'll be a significant operation in anyone's eyes. The key output of that pre-feasibility study will be the MET test work that we are undertaking at this point in time. Previously mined and historically mined at UME, they were very successful. They had a BIOX plant on site, achieving 90+% recovery consistently. That operation showed that, that the ore at UME only needed a very low amount of oxidation to get a very high recovery. So what we've seen is only about 30% of the ore at UME needs that oxidating technique. And there is a lot of developments over the last few years that have really improved the recovery of this style of mineralisation. And once we get to the growth profile of UME, once we get it into operation, we know we've got the ability to grow. We've got 60 kilometres of tenure on what is a highly prospective shear zone. There's multiple operations already and multiple gold occurrences already that haven't been drilled out at depth, that we don't know the limitations of those occurrences at date. Currans Fine, for instance, we completed a small campaign there last year. There's a number of 3 metre wide intercepts going at plus 30 grams a tonne. We hit a nude lode out there, which was 5 metres at over 6.5 grams a tonne. It does show that this area is primed to continue. The only gap in our tenure over that 60 kilometre stretch of the gold belt is where Ramelius Resources has that Penny West gold project. If we look at the near mine area, we've got 1.8 million ounces in the near mine exploration target. Now, I said before that this operation and the resource is limited by drilling. We've had a look at the areas of the near mine, and we've done a lot of work to understand the structural architecture of the region, and we've been able to define this exploration target based on that. It shows that there is close to the mine workings that there's already potential addition in that top 100 metres, on that top sort of 500 metres, of almost sort of 800,000 ounces. That's very low cost ounces to be able to add that into the mine plan. And when we look at depth, the drilling at Link to date, which is the area just north of the main lode, has only been drilled down to around 500 metres. If we look at the main lode in comparison, we've got drilling down to 950 metres below surface. We know that the mineralisation continues at depth, and there is a significant amount of resource expansion available at Link. We've also had near mine discoveries at Midway and Paddy's Lode. Here we continue to find narrow, high-grade vein sets that will add further resources to this project. The Paddy's Lode looks to be an offset at UME main lode about 200 metres to the south. This has the ability to continually update with a very limited amount of drilling, and the more ounces we're able to add into these extra areas at Paddy's and Midway are only going to improve the potential production profile we'll have at the current operation. Some of our regional targets, as I said, we've got Currants Find and a few others. These are very similar to the Ramelia-style Penny West discoveries. Narrow vein, high grade, short strike length, and they just take the time to be able to drill these out. Now, further to the south, we had a heap of tenure that we've got the 100% mineral rights for, and our neighbours to the north, Venus Metals, have the all other mineral rights where we have the gold rights, and you can see it outlined in yellow. They did a soil campaign late last year that found a really high-grade lithium anomaly. Subsequently to that, they've gone out there, done a drilling campaign earlier this year, and they've had results at 24 metres at 1% lithium coming out of that project. We did some mapping late last year, as well as a number of soil surveys, and we've defined probably a 12 to 13 kilometre lithium anomaly to the south of where Venus's drilling is. We've done some detailed mapping on a small 500 metre area, as you can see on the side. That highlights that there's potential sort of 20 to 30 metre wide pegmatites running at sort of 100, 200 metre strike length. And you can see there looks to be a stacked vein set that we've got running through there. This is very early stage. You know, our focus isn't on lithium exploration, but there is the potential to work with people to advance this project. Similar out at Mount Fisher, Mount Eureka, we've got this area situated just north of Wiluna and east of Jundee. It's about 1,000 square kilometres and 200,000 ounces in gold resource. We've defined a number of very high-grade targets here at Mount Fisher. However, you know, it probably takes someone with a bit more commitment and a bit more ability to go out there and make that commitment, spend $2 or $3 million or even more drilling this area out. If I was to go get $2 or $3 million worth of drilling, the biggest bang for our buck would be at the UME project because it's high grade and there's so much room to be able to expand that. This probably sits better within another company, and we've got a few interested parties looking at this now. So why invest in rocks? You'll see, other than Tuesday of this week, that there's been a massive disconnect in a lot of gold equities with the gold price. The gold price is nearing, well, it's past all-time highs in US dollar terms, $3,500 Australian an ounce, and a lot of gold equities are still trading at, you know, a 30 to 50% discount on where they were less than 12 months ago. Here is a perfect opportunity for investors to be able to come on board when the market is starting to turn. And we always talk about trying to pick the bottom of the market in gold equities, but I well and truly can say that I think that bottom of the market is well and truly behind us now. So it's the perfect time to be looking to invest in gold, and there's no better resource to invest in than a high-grade 4+ gram per tonne resource with 2.3 million ounces that has the grade and scale to be the next gold development on the ASX. Thank you very much.